It is time to begin. It is about 10 a.m. on 8 November, year of our Lord 2022. I hope you voted. If you didn't vote, today's the day. Go vote. Okay, we're about to get started. I'm Jim Munchback. We're about to get started with the blueprint for financial success. This is an assignment review for my students of personal finance at the University of Houston at the Bauer College of Business. So hopefully you can hear me. I just went live on the YouTube and Facebook. Now I guess it's time to kick into the Zoom meeting. Give me a minute. I'm going to go ahead and fire up the meeting in Zoom and give our students a chance to come in and be a part of today's class. Okay, we've got some students coming in. I will say welcome, welcome. Welcome if you're joining us in the Zoom room. Good to have you. Got students joining now. Hope you guys had a great week. Today is voting day, so if you haven't voted, I would encourage you to go vote. In the chat, if you could please just somebody let me know you can hear me. I appreciate it. Awesome. Thanks, Jessica. I appreciate that. How are you today? I'm good. Thanks. So we are going to talk about the blueprint for financial success. Good morning, Elisa and Ruby and everyone else who's joining us. So we will get started officially in a couple of minutes. I've been out of town. I was at a conference all week in Phoenix, and so I have a couple of announcements today I want to make. I probably should wait until we get officially started at 10:05 a.m. But I think since for those of you who are here, I'll give you a little heads up. So if you check your Blackboard, you should see that I've added class participation points. Now, I didn't completely get through it. I jumped in there this morning, and basically what I did was I looked at all the students who had scores that were high enough for me to assume that you've completed all of your assignments. And so I gave you, those of you, unless you had a score of less than like 400 or so, 450 maybe, if that's you, if you had a lower score, I still need to do a little analysis in your Blackboard to see how many assignments you may have missed. So if you did every assignment, even if you did them late, and even if you received only 1 point for the late assignments, you still qualify for the full 200 points in class participation. So I went ahead and I posted those points. That doesn't mean they won't change. Here's how they could change. Your class participation points, 200 points, which may show up in your Blackboard today, they could change. Here's why they could change. I would definitely deduct 50 points. Actually, maybe more than that. You are required to do the capstone assignment. So let me just leave it at that. If you don't do the capstone assignment, you will see your 200 points disappear until you do your capstone assignment. So if you do it late, you're going to have a pretty significant deduction. So your capstone assignment, you get 2 weeks to prepare for it, and to complete it rather, not to prepare for it. You've been preparing for it the entire semester. So we're going to talk about that a little bit more, but I wanted you to know you should see your class participation points in your Blackboard assignment. So that's good news. Another thing I wanted to kind of announce is some of you, I'm going to show you I'm going to show you an assignment, or not an assignment. I'm going to jump into Wright Capital here. And I'm going to show you this student's, and I changed the name, by the way, but I'm going to review Captain Cortez. So if you go into your financial plan and you notice that your name has been changed to Captain Cortez, it's because this is your plan. And I didn't get any, as far as I can tell. I've been out of town, so I may have missed your emails, but last week in class in this Zoom meeting, I asked you to send me an email listing your specific concerns and questions if you want me to do a tutorial. And I didn't get any. If I missed it and you're on this call in Zoom, please chime in the chat and I will get all over it and look for that email. Again, I was out of the office, so it's possible I missed it. But if you sent me an email with a request to review your plan, that was what I asked you to do last week, as I recall. And so I was hoping to have several students send me an email with your questions, specific questions related to your financial plan and what you've done to try to move the needle and get things to be somewhat accurate. So again, I didn't receive those requests, which was odd to me, but I'm going to go ahead and do a little tutorial today in this Zoom meeting, just to review this plan, this student's plan. Again, it's Captain Cortez. The names have been changed to protect the innocent, hopefully sufficiently changed the name. So we'll have a little fun with Captain Cortez. We'll do that today in preparation for this assignment. The assignment for this week, rather, is the Blueprint for Financial Success. And this is I posted this at Missional Money, so you can jump over to missionalmoney.com and you'll see this is not exactly the assignment. That will be in Blackboard. But this is really what you will do. This article that I posted is also going to be in Money Study Group, and it's really the context that you will study to prepare for this week's assignment. Now, some of you will notice that you have sufficient points already in Blackboard. Once you complete your capstone assignment, assuming you get the full 200 points, you will be able to do that simple addition in Blackboard and see whether or not you even need to do this assignment. So this is, for some students, kind of like extra credit. It's the 12th 50-point assignment, so I owe you 12 assignments. So this one is will be posted today, the Blueprint for Financial Success. I've never done this assignment. This is new. So if you complete this assignment, you will receive lots of grace from me, as we usually, when I do an assignment the first time, there's some bugs that need to be worked out. So, you will probably receive full credit for this assignment if you even come close to what I'm looking for. But let me give you the goals of this assignment. The Blueprint for Financial Success is an assignment that's really for you to review the idea of financial planning. When I say the idea of financial planning, I mean this. You've spent a lot of time, a lot of effort, you've done a lot of work this semester in creating your own financial plan. And one of my big regrets in the way that this course is structured is that you kind of have to figure out how to use a financial planning tool, a piece of software. I would love for you to not have to fiddle with all of that detail. But the reality is, each one of your data cards contains specific information about each one of your elements in your financial plan. So I'll show you as we go through Captain Cortez's plan how some of those details show up in the kind of the results. Now, just so you know, again, I've said this multiple times in the semester, I am not looking for you to become an expert in the financial planning software. Again, I wish you didn't even have to mess with the software, but it's turned out to be a pretty good tool to keep you engaged and help you work on your financial plan. But please don't feel pressure if you don't get it exactly right. Don't worry about it. I'm not going to grade your capstone assignment with a lot of critique. I mean, I'm looking for you to help me believe that you understand the basic ideas that we've gone through this semester, and that you're able to go ahead and, reflect those in your financial plan. And most of you are doing an awesome job. But you'll see here in a minute that Captain Cortez, who has done an awesome job himself, Captain Cortez has pushed the envelope on trying to get his probability of success to look okay. And I'm pretty sure Captain Cortez did that for me so he could just move forward. And so we'll have a little fun with that in a minute. But I just want you to know this assignment this week, the Blueprint for Financial Success, is really just an opportunity for you to review the basic ideas in a financial plan for your benefit. And then when you go through the assignment, you'll see that it's dual purpose. In addition to you just kind of sitting back and reviewing the idea, the flow, the schema of a financial plan, it's in addition to that, though, it's an opportunity for you to take a look at your plan and your blueprint and your plan to just kind of give it an overview to prepare for your capstone assignment. So I'll show you how to do that, and we'll jump into that now. It's 10:12, so it's definitely time to roll. So let me start by jumping into this financial plan with the captain. So let me get my hands kind of free here. I'm working with my iPad, so you see what I see. And I'm going to just try to make this work real well. So, as you know, one of the things that I'm looking for when you complete your capstone assignment is when you go to this retirement tab right there. That shows we're in the analysis. So you should be able to see that. I think I can enlarge that so y'all see that. And this student, Captain Cortez, did a great job of getting this probability of success to be 100%. And when I looked at this, I just jumped in to review this plan. This student, by the way, is doing a great job in the course. But this plan is what I would call JUBAR. Anybody want to guess what JUBAR is? I'll give you a second. If you're on YouTube or Facebook, you're welcome to give it a stab. What is JUBAR? It's the family-friendly way of saying another word, that jacked up beyond recognition. This plan is really bizarre. In fact, when I reviewed this plan, I had to call my tech team because I couldn't figure out how in the world this plan could have any probability of success. And I'll show you why. So if this is your plan and you're curious about what's going on behind the scenes, remember, one of the things I suggested you do in your plan is just jump into cash flows. When you do your capstone assignment, it's one of the things I'm going to ask you to do is review your cash flows. So let's just do that real quick before we jump in and review this plan. Let's just look at that. Let's look at that. So these are the cash flows, and I just want to know if you see anything that jumps off the page at you with the numbers. I mean, look at that first number. This Captain Cortez did what I asked, added 10 years, so changed the birthday, his birthday, which is great. And I wanted all of you to do that because I want you to be able to look forward into your future and assume that you made some contributions to your 401k and to your other accounts, your Roth IRA, your taxable account. I wanted you to assume that you were making a certain income. You got the job, your dream job after you graduated. And so you set up your plan, you started investing, you started putting money into your 401k and your Roth IRA, and 10 years later, you have to make the assumption that you've not only contributed to those accounts, but that you've selected the right or just a good asset allocation. Because remember, in terms of investment strategies that are designed to help you manage risk, maximize return, and minimize risk, one of the most important, the single most important determinant of your portfolio's returns is what? Asset allocation. And so you had to do that. That was one of your assignments, is to do that. And so Captain Cortez did that. And we're going to take a look in a minute and see what's going on in his plan. But before we do that, I want to jump back out and I want to show you something that relates to this week's assignment. So when you go to Profile, everybody can go to Profile and you'll see Blueprint right there. So Blueprint it's a new feature. We've added this. This is the first semester we've had Blueprint. So the Blueprint for Financial Success, this assignment is one that, like I said, it's new, but this is a tool that is integrated. It's part of your financial plan. And if you would like to just go look at it, you'll see that there are 3 tabs. You've got net worth, you've got goals, and you've got income, savings, and expenses. So it's just a really good visual of your financial plan. And I'm so excited about using this with my clients. It's very interactive. So in other words, as you can see, Captain Cortez, we are now in net worth. It shows his net worth and how he has this net worth of $1,046,000. So that's Captain Cortez's blueprint. If you didn't know that you had a blueprint as part of your financial plan, I made that card, that element available for you at the beginning of the semester. And again, every client that I have, I include the blueprint as part of their financial planning package. It's a great tool. Again, it's a visual. When you click on these items, you basically are clicking on the data card behind it. So each of these elements, each of these components that you see right now that make up this net worth, each of them are interactive. So you can click on that and go right to that card and make edits. So for example, in Captain Cortez's plan, when we go to the home, the primary home, you see the information that Captain Cortez has added to his home. So this was one of the first things I saw in Captain Cortez's plan. And I'm wondering if you can see anything in this plan that might impact that probability of success, that might impact the cash flows in this plan. And again, I'm not looking for you guys to be experts in this whole process of analyzing your financial plan, but we did spend an entire we spent about a week doing, in the week that you set up your home, I did a pretty thorough tutorial to show you how to set up the data card for your mortgage. And since your home is a pretty big asset, it's pretty important that you understand the expenses related to owning a home. And that's why this is important to me, that you learn it, that you understand it. And so looking at this data card, I see that Captain Cortez has done some very imaginative things, but I think mostly, in my opinion, Captain Cortez is kind of clueless about what's involved in this data card and how it's impacting his plan. So I want you to see this. I want you to be able to simply go, okay, I'm looking at the data card for the mortgage for Captain Cortez, similar to the data card you have, with each of these fields representing expenses that relate to this asset that's all part of the financial plan. So Ruby says the annual property tax is even higher than the purchase price, ? The annual insurance is higher than the purchase price. That's not exactly correct, because the purchase price in this case is $2 million. But you're right. The annual insurance of $100,000, that's how much premium, the expense related to this home Captain Cortez has listed, which means when we go back to, let me see if I can do this. When we go back to retirement, this is what you'll want to do. It doesn't take long. You go to so now I just went to retirement. It's in the analysis. Oh, what did I just do? Captain Cortez. We're in the analysis. See how we're in the analysis? That's the tab that we're in. And I want to see what's going on in this plan. So this is what I would do, and this is what you can do in your plan. Click on cash flows. And then when we click on cash flows, we see, let's look at expenses. So look at the expenses right there. we'll go back to the homeowner's data card in a minute, but because it's too small a coverage compared to the price of the house. Elisa, that is absolutely right. The problem is the coverage and the premium. And I know, again, this may be kind of inside baseball, but in that homeowner's data card, what you're doing with the insurance is you're telling the computer, the software, how much you're paying for your insurance. You're not saying, here's how much coverage. We'll go over that in a second too, but just so you know, that Elisa, you're right in identifying that, but you're identifying the $100,000 as the coverage amount, which it's not. It's the premium. It's how much Captain Cortez is paying for this homeowner's insurance, which is obviously $100,000 a year would be a redonkulous amount of insurance to pay the premium. So let's look at expenses and see what we have. So we have housing expenses and we have living expenses. Let's jump into housing and see. So you can do this too. If you want to drill down into your financial plan, you can see what is happening here. So look at these expenses. It's like, are you kidding me? I mean, really? How much property tax is Captain Cortez paying? How much see, this is where the insurance is, and you see over the years that is growing by inflation. But property tax, and this is total housing cost all the way over. So again, all I did was I went to, let me just back up to show you what I did so you can know. I don't want you to be confused, but so we went to retirement, we went to analysis. It looks good, doesn't it? It looks good. There's money left in the plan, which is ridiculous. Because when you look at these cash flows, like if we go over here to retirement details, just for fun, look how much income shortage is in this plan. Even though it's got a probability of success of 100%. It's crazy, I think. Something's wrong. Again, I had to call my tech team to figure out how in the world do we get a plan that has this much jacked upness to, I mean, it's a bizarre plan. It really is. But I give kudos to Captain Cortez, because I'm going to show you some things Captain Cortez did to make this plan have a 100% probability of success, even though it is absolutely, as you can see, a redonkulous plan. But hey, chances are when I graded this assignment, I did not dive into this plan to do an analysis. Obviously, I don't have time to do that on every assignment. And in this case, I'm sure Captain Cortez got full points. If he turned it in early, he got 60 points. And the reason I'm hoping Captain Cortez is watching this Zoom meeting is because when you do your capstone assignment, you will have to dive into your plan to a little bit to show me that your plan makes a little bit of sense. And to do that, again, you're going to jump into cash flows and just see if there's anything bizarre going on. And in this case, you can see there's some things that are going on that are bizarre. That goal right there, exact, is another one that I wanted to highlight. Summary. So goals. Oh, you know what? I think, there we go. Let's just look at goals. So you can see this is the goal, and this is purchasing the house, and I'll show you how to fix this now. But just so you know, Captain Cortez has a goal of purchasing a home for $2 million, and it's showing up in 1 year. And so let's just jump in and do a little analysis. And again, if this is confusing to you, if this makes your brain hurt, just don't worry about it. Chances are, if you didn't do the strange things that Captain Cortez did in your plan to get the probability of success to be good, then you're probably just fine. But I want to show you, because this will be helpful for you to know how to just diagnose your plan if you want to do that. So let's just go over here to the net worth. That's where I'm at right now, net worth. This is where you go to jump in and see, okay, we've got property. So we're back in the homeowner's data card. And here you should be able to see a couple of things that you might want to be aware of in case your plan has this. So for one thing, the purchase year is calendar year. So let's change that to already started, because basically you have a loan. Captain Cortez has a loan. And Captain Cortez says the value is $2 million. That's great. He says the purchase price is $2 million. That's great. Annual appreciation, annual tax, that's all fine. I would encourage you, I don't think you'll get a deduction if you don't do this, but I keep forgetting I was trying to use my keyboard, which is not attached to my iPad. So let's say there's going to be some maintenance always. So I'm just going to add the maintenance, $2,500. Now the insurance is not going to be, so for a $2 million house, I'm just going to guess that the insurance may be, let's say $11,000. I don't know, and I'm not going to give you any grief. It's probably $2 million. I bet it's less than that. I bet it's more like $7,000. Let's just say $7,500. I don't really know. It would depend on the type of insurance that they have. So I'm going to hit save. Okay, so this is easy, right? Hopefully you're seeing what I'm doing. It's just not rocket science. It's super easy. Now, what do you think about that? Do you think anybody pays $22,100,000 a year for property tax? Obviously, either Captain Cortez didn't do the research or he just threw some numbers in here. But this is just going to whack his plan to death. So let's say you own a $2 million property in Houston. What do you think your taxes are? I just got my tax bill, and it was like a couple grand a year. My house is probably $350,000. It's not $2 million. Captain Cortez obviously has a much more affluent taste than I can afford. But at any rate, so here we go. Let's say that the annual property tax on this property, I lost my... So let's say it's 10 grand. That's not probably too much. I think that's probably a pretty good guess. I'm going to hit save. So now, just for fun, after changing those things, let me go to insurance here and let's see the homeowners. So now I'm just jumping into the house, which is spelled incorrectly, but that's okay. Let's just change that to home. I'm just going to call it home. And it's Captain Cortez who owns it. It is definitely in the plan. Annual premium $100,000, and we know that because, well, where did we get that premium? I guess we got it from the home. So maybe I need to change that. But the coverage amount, this is, I think, Elisa, this is, yeah, the insurance is not right. So we need to have the same amount here that we want to insure the house for. So let's just say $2 million. And we'll say save. Now I'm curious, why is it that this is saying, oh, there we go. Once I hit save, see it picked up the annual insurance premium, which is good, but it got that number from the homeowners, from the property card. Okay, so now we've corrected the home and the insurance. I think we're good. Now let's just for fun, let's see if the retirement analysis changes. So it was already 100%. And so you see that didn't change. But it's got $284,000 at the end of the plan because if you look at cash flows now, let's go back to cash flows and just see. So there's not that one super big payment, right? That's gone now because we just fixed it. Okay, that's one thing. So in this plan, if Captain Cortez turned in the screenshots that will be required in the capstone assignment, I'd be like, whoa, did you even see that? Like, that's what I want you to do. I want you to look at your plan and look for things that are just not right, that are obviously not right. And then you comment on it, try to fix it. If you can't fix it, don't spend a lot of time. Just tell me, hey, I see this. I see there's a problem here. I'm not sure why, but clearly there's a problem. I wouldn't give you deductions. I might give you a little feedback. On your capstone assignment, though, it's like you've had all these opportunities to get feedback. So again, let's just go to retirement analysis and let's look at retirement details. Now look, we only have a $384,000 shortage. Now here, let's go. This is so much fun for me. I hope it's fun for you too, just doing this review. But I want you just to look. Let's go back to the blueprint and just take a gander. Net worth of $1 million. Let's see what Captain Cortez has done here. So this is the net worth section. So we see all of the data cards that are built into this plan in this section. So Captain Cortez has given himself $200,000 in his bank account. Probably not accurate, but maybe, who knows? It could be. Savings account, another $100,000. A 401k account, just named 401k, it's 200 grand. Captain has an investment account of 10 grand. He gave himself a bond, just a bond. He calls it a bond. It's actually an account. When we go to that account, we can see, that may not have been a good idea. I just kind of locked up my screen. So I'm just going to leave that there for a second and hope my iPad recovers from this obvious glitch. But so it's called bond, but what it is, it's just an account. Captain Cortez set up, he added an account, and he did really good asset allocation. I was going to show you that, but it's not working. So let me hit, see if I can get this back. Okay, there we go. So if I can shrink that down, I'll just jump right back into net worth, and we'll go to the bond. So that's under investment. You should be able to know where that is. So see there, it's all listed. The same stuff that's on the blueprint, the data cards. So when I click on this account, it's actually an account. He calls it a bond, which is clearly an indication that Captain Cortez isn't really understanding the whole process here as much as I wish he could. But nonetheless, Captain Cortez did a great job in asset allocation, except he did put a lot in international bonds, which is probably not great. But nonetheless, I mean, again, I'm not going to, I don't know what to say. All I'm going to say is that this has $560,000 in it. So if this is your plan, I'm going to be like, well, why did you do that? Why did you just throw all this money in your... Oh, I know why you did it. Because you wanted the probability of success to be high. Great, but let's try a little reality here. So again, if we go through all of these investment accounts, your job was to create a 401k account, right? You were supposed to do that because you were supposed to assume that you got the job you wanted and you went ahead and contributed to the 401k. And so you set up that account. It's called the Big Brown Bucket. It's called the 401k. It's called the tax deferred type of tax allocation. That was last week's assignment. And you were supposed to have 3 buckets in your plan. In this case, if we go to let's go to investment, and this was kind of last week's assignment. If we go to tax allocation, again, this was last week's assignment. If we click on tax allocation, we'll see here that Captain Cortez has $360,000 in a taxable asset, $642,000 in a tax-deferred asset, which is 401k, or 401k. It could also be a tax-deductible IRA. So for those of you who did some research last week about tax allocation, that's really what we're looking for. These are the 3 buckets. Taxable, which means there's no tax benefits. You can put as much money in those taxable assets as you want, any kind of account. Tax deferred, these accounts have certain rules, boundaries, and limitations, and you learned about those last week for those of you who were interested in and paid attention and did your homework. And then the tax-free asset, which is basically the Roth IRA. In this case, Captain Cortez has given himself $268,000, which is almost impossible to do because in 10 years you can contribute only $7,000. Well, actually, if you're Captain Cortez's age, you could only contribute $6,000 a year. That's 60 grand. What kind of returns would you have to accumulate that kind of money in your Roth IRA? I don't know, but Captain Cortez did it. So that's just some of the things that, if you want to review your plan and, I appreciate, again, I really do, that Captain Cortez was able to get his plan to 100% probability of success. But there's one more thing I want to show you, and I'm going to go to saving, and I want to show you a couple of things Captain Cortez has done. So before I do that, let me just go to Blueprint, because I want you to see how you can review your plan kind of quickly. So again, the Blueprint has the net worth, the goals. So Captain Cortez, you can see, didn't really put any goals in his plan. The default retirement is just automatically there. For you, if you want, you can add some goals to your plan. You don't have to, but if it's your plan, if you decide that you like the idea of having this plan and you want to actually make it accurate and make it yours, you're going to have access to this tool after you graduate. And so in that case, I would suggest you think about some of your goals. That's really part of the financial planning process, and I would encourage you to take advantage of it. I'm sorry, I'm getting a call. I should have turned off my phone, but I didn't. So anyway, we're back. So there are 3 sections in this Blueprint. If you want to do a quick overview of your plan, this is a good way to do it. So you've got the net worth. That shows everything that's part of your plan in terms of assets and liabilities. And then we go over here to income savings. So I just wanted to point out that Captain Cortez has a $100,000 salary and $300 a month in Social Security. Does anybody see any issues with that so far? $300 a month in Social Security. And in addition to that, Captain Cortez is contributing 31% of his income to his 401k. He's contributing 10% of his income to the tax-free Roth 401k, Roth IRA. And then Captain Cortez is also saving in a taxable account 20% of his income every year. So think about this. If this was your plan and you submitted your capstone showing these data cards are part of your plan, they're going to be part of your capstone. And I'm going to be like, what's happening? So Elisa, you got some good stuff there. Tell me about the Social Security. Yes, the Social Security is an issue, but what is the issue for Captain Cortez here? The Social Security is an issue, but what is the issue specifically? And anything else you see here, anyone, if you're watching on Facebook or the YouTube, please contribute your thoughts, your observations. Do you see any issues here in this financial plan? Looking at this Blueprint for Captain Cortez, who is saying, I'm going to save 30% of my income, 31% is going to go into my 401k tax deferred bucket. 10% of my income is going to go into my tax-free bucket. And 20% of my income is going to go into a taxable account. And again, I believe Captain Cortez had one objective: to get that probability of success up. So do whatever that takes. So come on, Elisa, what do you think? There's more to it than just Social Security. Tell me about that, somebody. 61% so yeah, that's it. That's the bottom line, Elisa, is the big problem is we got 61% of my income going into savings so that I can pretend to get my plan to have a high probability of success. Plus he bought the $2 million house too. Yeah, it's just makes no sense. It's like, okay, I'm just going to go in and create a totally ridiculous plan because I'm taking this course. And it's not exactly, doesn't make me feel very strongly about Captain Cortez's financial future. And so if you submitted a plan like this, I'd be like, seriously, come on, spend a little time, take it seriously. At least, it doesn't take that much time. Let me show you what we've got here as far as when I go to profile, I go to savings, let's see, not savings. Let's go to income. So we've got income of 100 grand and it's going up 3% a year. That's okay. That's fine. But you got to know that. So 10 years from now, instead of 100 grand, this is going to be much more income than that. And the income, well, actually, the savings is going to go up. So if you make, instead of 100,000, let's say you make 200,000, 10, 20 years from now, if Captain Cortez is still working, then he's contributing 61% of 200,000, which is even more, which is really jacking up his probability of success, which is obviously absolutely unrealistic, absolutely redonkulous. And so that's why I thought I'd have a little fun and play with this plan. But let's go back to income. And this is where I don't know why. I mean, there's really no, didn't see an explanation. But do you see the little check mark there that is probably not appropriate for someone who's 45 years old? Anybody? Going once, going twice, waiting for a comment in the Zoom meeting. I can't really check right now on Facebook or the YouTube to see if you're, yeah, you get it when you retire. Thanks, Elisa. You're going to have to get some extra points for your participation while everyone else is just taking the snooze button, apparently. Yeah, you should. Yeah, that's it. It's pretty simple. You don't get Social Security until full retirement age for me, I want to say, is 67 years old. It'll be higher for you, I suspect. But at any rate, I'm going to unclick that. And then I'm going to hit save. And anything else I should change? I think what I'm going to do, I don't want to go in and, because this is an actual student's plan. And I mean, like, if this was your plan, what you want to do is you want to go in here and start deleting some of these crazy additional accounts. And at least stick to the basic idea that you're 10 years older than you are and you've made a choice to contribute to your 401k. So how much did you contribute? And how much do you think it grew? You don't have to be right, but don't be redonkulous. And so, don't have all this extra money in a bank account just because you want to get your retirement analysis probability to be greater than it could possibly be. So, I mean, I don't know what else to say about this one except, now we have a $410,000 shortage. We still have a shortage, which is interesting to me. I'm not going to spend any more time diagnosing this plan. I just wanted to show you the basic process I would go through if you submitted a capstone that seemed out of whack. I have to go in and check and see what's going on, and I might give you some feedback, but chances are I'm going to say, why don't you just watch this Zoom meeting and see if you can diagnose your own plan? That's the whole point here. And so to do that, I went to retirement analysis. I went into cash flows. And if I wanted to diagnose this plan, I would just be like, okay, we've got a lot of expenses there. Living expenses, housing, debt, total expenses, $250,000 a year in expenses. And so housing, it's got mortgage interest. That's pretty high. Yeah, that is pretty high. That's probably one of the things I check. Let's just check that for fun. Let's go to profile. We'll go to property and the home, annual appreciation, purchase price, annual increase. Oh, that's not the mortgage. That's the property. So we have to go to the loan and we want to see the house. And let's see, we've got a 30-year loan at 6% interest. A monthly payment of 12 grand. And that seems like a lot, but that may be correct. I don't know. But at any rate, that's pretty expensive. Captain Cortez is living, in my opinion, if he's making 100 grand living in a $2 million house, it'd be like, remember, again, the point of this course is to understand the principles of personal finance. the law of spending and saving. Spend less than you earn so you can save more for what matters most. But if you're living in a $2 million house and you're making $100,000 a year, that's something's off with that. So in this case, the plan is successful in terms of probability of success because Captain Cortez has just magically given himself a ton of money and assets in the plan that will be eaten up over time. Nonetheless, even though he's given himself all of these assets, and this is probably the biggest thing in the plan that is throwing it out. So if Captain Cortez, if you're listening, I hope you are, I would go delete some of these additional accounts, just delete them, focus on those three buckets, those three accounts, your 401k, your Roth IRA, and your taxable account, and come up with a reasonable amount that you are planning to save out of your $100,000 a year income. Hopefully you did a little research to figure out that, whatever job you want after you graduate actually pays somewhere in the neighborhood of $100,000 a year. From there, you have to select the company and figure out how much is their match. And I don't even know. Let's just check real quick to see if you're doing your 401k is getting a match. Let's just see. So the primary match is 6%. Secondary match is 25%. I'm not sure where that came from. But at any rate, it's a percentage of your salary, 31%. Those are extremely, that's a lot. So I would fix that. So that's pretty much it for Captain Cortez's plan. Hopefully this is helpful for you to see the blueprint as a component of your plan, just to do a little research, to do a quick overview of your financial plan. It's super easy to do. Again, these data cards are all connected, linked, integrated. You've got 3 sections there, so you can do a quick overview of your plan. And you can pretty much quickly identify here in the blueprint if you need to do a little work on your plan. Chances are your plan is great and you don't even need to be listening to this lecture. But for those of you who are struggling, for those of you who are finding that your plan is really out of whack, hopefully this helps, and hopefully it gives you a little direction for how to move forward and prepare for your capstone assignment. The blueprint assignment that you're going to do this week, if you choose to do it, if you need to do it, if you need the points, is really, again, it's a review of the financial planning process. And I haven't even completed the assignment yet, so you won't see it until later today. Again, it's the first time I've done this assignment, and I'm making it available because we needed a 12th assignment. And so since we added this component to the plan, I think it makes sense. Although every time we do a new assignment, there's some kinks we have to work out. So I will give you lots of grace in terms of getting full points. I want you to tell me, hey, this assignment made sense. Just share with me what your observations are, and I will include that in the assignment itself. Again, if you have plenty of points and you don't need this one, I'm going to post the capstone assignment today as well. I think the capstone assignment I think I'll post it next week. You get 2 weeks to do the capstone, so it will get posted soon. We won't have class next week, so I'll be available same time, a Zoom call if you want to be here, but you don't have to be here. You're going to have that time to work on your capstone assignment. Again, if you have questions and you want some specific tutoring, do send me an email with your specific questions, and I'll be happy to do a video tutorial on your plan. And I won't have near as much fun with your plan as I did with Captain Cortez. And this was kind of just a crazy little thing. So let me show you one more thing here. Just before I told you I talked to my tech team, because I was like, how can this plan even come close to having a probability of success at all? And they were like, okay, let me show you. And they showed me this. And I learned this morning. So I'm going to go to income. And no, savings. It's the savings card. So this tax-free savings so it's 10% of the salary, and it goes on into perpetuity. And so I'm going to change that to 1% just to show you the difference. And Captain Cortez, again, if you're watching, you can change that back. But let's change the taxable to, let's change that to, let's say 5%. And let's change the contribution here to, let's say 15%. That's more reasonable. It's still a lot. I mean, look, that's 15, 25, 26% going to savings. So, I mean, that's a lot, but it's a little more reasonable. Now let's go to retirement analysis and just see what happens. So it gives you a lot lower probability of success and an $893,000 income shortage, but it's still showing 100% probability of success, which doesn't seem right to me. So my team told me that the reason for that is because it's kind of a glitch in the system. If we have this tax-free, I'm just going to delete that and see what happens. And then I'm going to go to retirement. And now you can see it's 0% probability of success. And the reason for that, it's kind of a glitch in the system. You won't see this, but if you decided to add a data card for savings, and you added a tax-free savings like that, it just somehow it gives you income, or it gives you savings that goes right back into your plan as asset, and it goes on in perpetuity. So it's kind of, like I said, a glitch in the plan. It was a puzzle to me. And so it was a puzzle to me that a plan that was this out of whack could possibly have any probability of success. And it's because by adding that additional data card, it kind of throws the software into a goofy cycle. So anyway, that's that. So this plan actually has a 0% probability of success. If we go to cash flows, we can see it didn't really change that much. It just shows that, the plan doesn't produce enough returns, and the expenses are high because of the house. So anyway, that's that. Okay. Any questions? Now's a good time to jump in, and I wonder what factors affect the probability of success. So that's a good question, Ruby. Let me just show you when I go to retirement and analysis, you see this little button right there that says action items. That's what affects the probability of success. So if we wanted to go into this plan and add some things, we could include some different things like savings and expenses, and let's see what else. So I'm going to hit save. So watch what happens now in this plan. If I said that, do we have the home? Yeah, you can't. Anyway, that's what affects it. If in this case, so do this in your plan too, Ruby. In this case, Captain wants to retire at age 50. Let's say he decides to retire at age 72. When I hit refresh, let's see what happens in his plan. Still says 0. Captain's salary. So this is where, let's go with aggressive and see. These are the things that change the probability of success. So you see, by going to aggressive in the asset allocation, it gave an additional 4% probability of success. But these are the things that change it. But remember, what we really have going on in this plan is huge expenses related to the house. So if we go to, well, I don't really want to do too many more changes because this is an actual plan, and I will be like having to do I don't know if Captain Cortez is actually watching. I hope you are, so you can see what I've done in your plan. I'll shoot you an email, Captain, to let you see what I did. I'll ask you to watch this Zoom meeting because I'm assuming that you may have missed a few. But anyway, Ruby, I hope that helps. That's what affects the probability of success are these inputs, all of these inputs. Like if you're going to retire at 50, you're going to have to save a whole lot more money early on to have accumulated enough money so that you have expenses between age 50 that you have to pay. These expenses are going to be, retirement expenses, living expenses that are going to go on and on. So anyway, that's that. I hope that helps. But these are the things that affect your probability of success. Just think of it like all of the assets and liabilities and expenses and income. All of those are factors that affect your probability of success in a financial plan and in real life. And that's why I'm hoping that most of you are getting some value and some benefit from seeing how these little pieces fit together into your financial plan. So thanks for the question. You're welcome. Any other questions? We're ready to wrap it up. All righty. I think I'm going to go ahead and wrap up. I'm going to jump over to the broadcast and I'm going to finish up. So if you're watching on Facebook or YouTube, we're signing out, and thanks for joining us. Please leave your comments, like the channel, hit the little bell if you want to be notified when we go live or post more videos. This video will be put in the playlist at Money Study Group. I am now